into the game. We're talking wood and grain. Charles bring the heat on Southern Yellow Pine. Mascot US species, all is on the line. Drag with the spruce, keeping knowledge defined. Ash and moderates, drop the facts in the booth. We on the buy, the sell ain't no hidden truth. Economics and trends, we got it all so clear. Lumber Word Podcast, best believe we're here. If you wanna make more, get in on the score. Join us every week, you'll be hungry for more. Love a been keen, though, whoop made known. Such rain Charleston, slide, plum ram known. Open to the scene, with the lumber supreme. Charles laying down facts with that southern yellow bling. Mac got that US swagger like strong timber beams. Greg's insights on spruce, rewrite the themes. Got the buy side talk, we stacking that flow. Selling knowledge, every week we still a show. Join the Lumber Word crew, let your business grow. For the sharpest minds, is what a place to go.
Hey everybody, welcome to episode 158 of the Lumber Word. 22526. Kip Fotheringham is our guest, reoccurring guest. Kip, can I call you an independent trader now? Is that the right terminology? What do you like to be called?
Yeah,
right.
that's fair.
He answers to many names, Ash.
Look, for anybody that's never met Kip before, been in the industry for a long time, ran mills, has been on the wholesale distribution future side, so knows a lot of stuff. And we were just looking at the green rows in the back that you were talking about, Kip. I walked into the Grand grocery store yesterday, and boom, right in front, all the Green River soda, everything that's green for St. Patrick's Day. Like, they just hit you up front with all that right away. And it's not for another like 3 weeks yet, is it? Or is it?
Yeah, but I'm kind of pre-gaming. I'm pre-gaming.
Yeah. I mean, you know, there's only two kinds of people in the world, Ash, and Charles knows this too: those that are Irish and those that wish they are.
Yeah, 100%.
Oh God, we had to go there. That's okay. All right. Well, look at
yeah. Hey, hold on, Ash. Didn't you say something about keeping this PG a couple weeks ago?
Well, we are going to keep PG, but I'm going to
gracefully bow out on that one.
They also had like 8 packs of Guinness in cans, and I'm still not convinced that that's doing a service, or is that a disservice to Guinness? You know, pouring it out of a can. I've tried it out of there; it's pretty good actually. But all right, well, let's jump into lumber. I'm going to jump into what I think is going on so far right now as we're talking at 12:13 Central Time in Chicago. A couple things that are interesting. Cash. What I heard this morning is some of the big guys out in the West, the few that are out there still, we're around 466. Does that sound right? 466 mil, 578-ish Chicago, if that makes
that was
sense.
That was midweek index print.
Yeah, and from the information Greg got from his spies yesterday and the volume we saw from some of the Eastern mills, cash traded at 410 to 420 equivalent in the East, which is about a 432 Chicago. And where's the board right now?
532.
Okay. That's what we're seeing. There was volume done out of the East on 2x4, 1011, 1011s, and 12 and longer tallies relative to that yesterday. Of course, it's only done with certain people, and we don't get to see in that sometimes. But I'm guessing it's getting...
Sometimes we do.
So the other interesting thing, and Kip, maybe you can jump on here, the big company that always EFPs, a lot of people, they're not EFPing yet. And interesting thing is we just got a car from a January EFP yesterday, right? Which is fine. So I think a lot of people are looking to EFP with the traditional people. And if they're not there, as we saw last January when they went off 3 or 4 days early, I'm not saying they're not going to be in there, but right now futures is a little bit probably cheaper than they're selling their cash for. Did I even summarize that correctly, Kip?
Yeah. So what you've had, like literally the last 3 years, is you've had, and we're talking about Can4, and they've had a program, and a very successful one, of selling premiums of 40, 50, 60 bucks and delivering 150, 200, 250 cars. and it's worked for them. And if you look at their mill nets compared to the other guys, it's been very successful. The issue now is if you have 30% less wood going across the border, and that we know that number, it's been 6 months now, then your production clearly is down somewhere in that neighborhood. So then the necessity to sell you haven't had the premiums quite that we have had, and the interest level when you have contracts, programs, VMIs, etc., the interest level to sell at that is gone down quite a bit. And so you do not have a lot of mills in the board. Why would they go in the board now at a discount? And do they have the wood? And I do know this for a fact that the big three Canadian guys, their inventory on the ground for sale, which is why it's been a bit perplexing, with the weather in the US, why have they not had to come to the market? And the reason is they have a 4-year low of inventory on the ground. That's why. And so you're like, well, I gotta, even on the Canadian side, if you can find guys that have to sell this, they have to sell that, for sure. If you need to buy some volume on the Canadian side, you are going probably to West Fraser, and their price is the highest.
Yeah, it is the highest from what I see.
So and we were having this conversation earlier about inventory. Somebody was talking to us, and saying that the mills are stacking up low grade, and I went, bullshit. There's no mill that's stacking up anything, because they can't stack lumber right now. They need to turn lumber into cash for cash flow. Because when you're losing the kind of money that's the losses that are being produced, the last thing you can do is afford to have finished product sitting in your yard.
Correct.
You're better off to have cash than finished lumber. Your decision to run and lose money has already been made. Kip, it's interesting. Like with obviously the 30% less coming to the U.S. market. That's a solid number. The thing that shocks me is that production isn't lower than it is already. And, I can increasingly see Chicago and East, Western spruce, not a factor in the market at all anymore, because it's just dominated by Eastern and European spruce. And that, it's going to be interesting, obviously, with the futures. With deliverable species of Eastern and hem fir. And so futures is a lowest common denominator. And we've been delivering and EFP'ing hem fir the last 2 contracts because it was the cheapest deliverable product. And I'm looking at March and going, we're probably going to be delivering or EFP'ing Eastern SPF because it's the cheapest deliverable product. And I think that's the biggest change in the market, is that, that understanding that there's more than, it's not a Western spruce contract anymore. It's a lowest common denominator.
The one thing I'd say about that, Greg, is I don't necessarily disagree with where you're saying about East and West, but one thing you do have to remember, and it's very important, right? The majority of Western Canadian production is the big boys. And the big boys, they're never going to say this, but what's the best thing that could possibly happen for them is a 200% duty, because it's 20% of their production. So they pick it up on the other 80.
The Southern
They are in the catbird seat. The higher, they're never going to say it, but just game theory it, right?
Yep.
The guys in the West, 80% of their production has no duty. The higher the duty, the better, because the other 75% of the country has to deal with it. So those boys aren't going anywhere. And especially in the East, and this is a big deal in the South. This is a way bigger deal in the South than it is in Canada. The offtake is going down. So your pulp mills, your paper mills, your pellet mills, if you don't have those guys, you're toast, right? And in the East, it's way more important. It is part of your mill net. It's way more important than it is in the West. So for those reasons, I'm not sure that I see more trouble coming in Eastern Canada for those reasons, and especially in the South.
But it kind of leads right into, I mean, for most of last year, you know, the South was the anchor on lumber prices. Charles, you know, bring us up to speed on what's going on down south.
I mean, it's a real interesting market overall. I mean, it's sloppy, and mills have done a little bit better job of diminishing issues, getting rid of problems over the past 3 weeks than anybody really thought they could, right? And they kind of cleaned them up, and prices have printed down, but you know, cash prices have still kind of lingered at levels that surprise most buyers, right? So pine as a whole seems like it's quasi at an equilibrium, but I think there's a lot of, in my opinion, humble opinion here, I think there's a lot of wood just sitting around anticipating a spring rush. But if the spring rush hits the way people are anticipating, prices that we've seen this year, only the low is going to be higher than we think it is.
Well, where's that wood sitting at, Charles? You mean sitting at a mill or sitting all over distributors and everywhere?
Well, I think it's going to be sitting in a mill for the most part, because I mean, they're going to move what they feel like they need to move. Then they have contracts, and then, you know, the big behemoth of a treater is going to come in, and they're anticipated to come in. And historically, they've already kind of dipped their toe in the water this time of year, but they haven't done it yet. And I heard from some pretty reliable sources that treaters are trying to change their buying habits to where they're a little bit more flatlined on that price risk versus being so peak and trough. So
I got a question to ask you, Charles.
Might not be buying the way some of these mills.
No, you're good. You're good. I just got a question to ask you. 2x4 16s on the east side. Number 2. See if I can adjust my eyeballs here. 550, right? And this is Friday's print specified. And I had a guy tell me in the East that they took 20 off their price, which was, 550. I'm sorry, 550. 475 was the West side ask price, and they took 455. How is there a $95 difference in East side? You know, I mean, I poured through all the Southern Pine charts over the week, and you should be buying West side 2x4 12s and selling as much 2x4 16s firm as you can on the East side. Like, why is there such a divergence in these different regions now, more so than I usually see? Or maybe it's always like that.
No, it's not. I mean, I think we touched on this when we were talking about the composite number 2 price between 4-inch between West, Central, and East. Remember when we talked about that a week ago? And there was like a $60 spread, right?
Yeah.
On the composite. So I think people are used to Texas being its own market, and Texas is not kind of carrying the load as it has historically. And I think we can see that in all species as a whole. So those prices are going to be a little bit more depressed. But that also tells you, though, that the carry through markets, and especially Central being sandwiched in the middle, they're going to be the first ones to break, right? And when that happens, it precipitously spreads back east to the north. And then the East comes down harder than people anticipated. But the linchpin here is spring buying. If mills can hold off until the perceived buy comes to market, they'll be in a good position. But if they get in a position to where they have to move wood, it's going to make it pretty difficult fast.
Aren't pine mills, aren't they in the same situation? As there's no incentive for them to like pile up dressed inventory at this point in time. I mean, their inventories are in the, you know, really good shape, and there's no incentive to pile that up to think that they're going to get more money later. It's better to turn it into cash.
They don't really have the space either.
And we had Thomas on last week who, you know, highlights saying, hey, listen, you know, our inventories, we don't have a lot that we need to, like, sitting in front of us that we need to force out the door.
And you're right. And I guess what I'm talking about is order files. And I think that was a question that we missed when Thomas was on to figure out exactly what that looks like, because everybody has a different perspective of what that inventory level is, right? Is that a 5-day window or is that a 25-day window? So if you look at projections and you look at what's actually coming at them, that's where the gray area is. I'm not necessarily meaning they got 5 million foot at 3 different mills of 6 different items, right? What I'm saying is there's production that's coming, and the demand that is aided up over the past 90 days, I think we can all say has kind of tepid that pace a little bit. They've stepped back and said, okay, let me figure out exactly what I need to do here, because I have to be strategic, because these prices are a lot higher than we thought we were going to get to. So now I'm going to buy what I need. A lot more mixed trucks, less straight truck load volumes, right? Not saying, once again, that it's just stacking to the sky, but it's anything on the come in a 5-day window doesn't really give anybody any cause for pause, in my opinion.
Charles,
because if you think about like East Side 2x4 is traded in the fourth quarter in what, like the 350 to 360 on random, and 2x6 was sub 300.
Yeah, I mean, they got down pretty low. I think the low trade on 16s was like 335 or 325.
So, one of my questions, like Charles, like when Central is 445 on 16s, and you saw the price on West Side, how? I mean, are all the Eastern mills just shipping it all into Florida? Because you can ship basically at a $30 or $40 discount to Atlanta and other Eastern delivery locations, a lot cheaper than the 2x4 16s. How does that number even get up there? Like,
well, you also have a freight component too, Ash, right?
I mean, I understand that, but you can deliver it for a lot less than $100 to Atlanta from the Central mills.
Actually, outbound Alabama is anywhere from $4 to $4.35 a mile. We're paying from South Alabama to Atlanta like $1,350
on a rail. Then
no, on a truck.
Yeah, I'm saying let's just add a rail. So there's $100 difference between the east side and the central side.
Yeah,
that can't be.
If you can wait for the inventory, you can buy it on a car from the central to come back east, 110%. And we're utilizing that strategy now to position our inventory, right? But not everybody buys that way.
Why? I mean, like, why do I want to pay $100 more or $50 more if I can look and buy it out of the central? And
the same reason why you find some of these niche things you find and nobody else has thought of them. I don't know.
Okay.
Just is what it is.
No, that makes, I just saw this time I was pouring over those charts Saturday. I'm like, my God, there's a big divergence in there. Maybe there always is.
Well, and I mean, the big thing is you got to look at it from a delivered basis, right? I mean, we can talk about mill numbers and print all we want, but if a mill is only looking 5 to 7 days and they're $535 in Carolinas for 2 before 16, you can buy a 2 before 16 in Alabama for $475, but you got to get to Charlotte, right? That's a $65 freight.
Okay.
And you have it, right?
Yeah.
But say the east side has it, you can get it there faster, and you're in a lean inventory because, once again, not everybody's stacking wood everywhere. So you need it. So you just pay the extra $5 to $7.
Yeah. And most buyers nowadays just don't want to run out of lumber. They don't look at the different nuances that we look at, which
isn't that the number one job? Don't run out.
Yeah, it is. It is. Hey, Kip, Glenn was asking a question here. Can you help us with this one first? Because I can't begin to start. Can someone explain how exactly the Canadian government will be, I don't like using the word subsidizing, because will be subsidizing mills up north moving forward. How practically are they providing a safety net? Are they simply going to keep the price of logs low, or are there other mechanisms they are, I think, doing, or they're going, whatever, or they're going to use? Sorry.
So, yeah, I mean, I've always said it's kind of Econ 101, right? If you are American mills and the Canadian mills are subsidized, and then you also have about a 35% currency exchange in your favor in Econ 101, which we've all taken, then all the American mills would buy the Canadian mills, of course, because they're subsidized and they make so much money, which we just saw in the fourth quarter. Maybe they don't actually make so much money. We saw write-downs of well over $1 billion. So that probably puts the subsidy thing to bed for a second. But the important thing is, we have a softwood lumber issue with the American government that's been going on for a long, long time. And so the stumpage system in Canada is the one that's always under threat. And the government, it is a mathematical number. The government just doesn't put it up or down at will. If they did, then all the Canadian mills would be making money.
The lumber market can be unpredictable, but with the right tools, you can make confident decisions. Fast Markets is the trusted home of the Random Lengths Weekly Report, providing detailed pricing for over 1,600 products, including softwood lumber, structural panels, and more across North America. As for hardwood markets, the Hardwood Market Report is your go-to source for pricing benchmarks, market commentary, and in-depth monthly insights through HMR Executive. These resources give you clarity in a complex market, helping you stay informed and prepared. Fast Market's Random Lengths price assessments are derived from verified price inputs collected via online submission forms, authenticated physical documentation, and interactions with buyers and sellers across the supply chain. All data is evaluated within Fast Market's proprietary assessment platform, Mind, in strict accordance with our published methodologies. Each assessment undergoes a rigorous approval process prior to publication. Key benchmark commodities are subject to independent third-party audits to ensure alignment with Fast Market's methodologies and compliance with IOSCO principles for price reporting agencies. Get started with Fast Markets today. Visit fastmarkets.com/lumbertalk to find out more.
But the interesting part, and this is something to pay attention to. So the Canadian government, with the duties now at 45%, has put out some programs to try and help them out, no different than you would in the US if it was steel or whatever. The interesting thing is the majors in Canada are tapping into that. And the reason they're tapping into it is if you go to your lender, and we all know how this works, you go to your lender and you got to change, how much you're borrowing. You got to change some of your covenants. You got to extend them. You need to extend maybe some interest rates on some bonds. All of those come with a cost. If the government says, I'm going to lend you 20, 30 million bucks, that is over and above what you're getting from your lender. So it doesn't come with all those handcuffs on it that it would be if you were going to your bank. The interesting thing is that they're doing it, even though it's just red meat to the coalition, right? I mean, how are you going to argue the Canadian government just gave me 30 million bucks? That's not a subsidy. Kind of is, right? So the fact that they're doing it probably tells you the straits that some of these companies are in, even though they know full well that this is going to lead to higher duties down the road, especially, with the administration we're dealing with. It's guaranteed if you start borrowing money from the government, and they're still doing it. What does that tell you? They have to.
The majors that are, have 20% of their production in, 80% in outside of Canada, them tapping into it is less of an issue than some of the people that are more independent, and it's kind of to the detriment of the whole industry. If you have high cost producers that probably shouldn't be running, but that get the money so that they can run more lumber and keep the price low for everyone. Does that make any sense?
But remember, it's just a loan, right? You got to pay it back.
Yeah, that's a wink. That's a wink and a nod, though, from the guys that really shouldn't be in business right now, that should be shut down. I mean, we have a mill And when we look at that, we go, okay, it's fine to take that money if we're not going to pay it back, but if we have to pay it back, it doesn't make sense to borrow money to lose money. That makes no sense. Econ 101, right? That's the definition of insanity.
Yeah.
And so I just look at it and going like, you kind of like cutting off one arm, to like, so that you can like keep throwing the ball with the other one. And it I still get down to this whole thing. Over the last month on the show, we were bullish, we were bearish, we were bullish, we were bearish, we were back and forth, and I finally came to the conclusion and go, well, maybe we're at equilibrium, that all the supply constraints over the last 12 to 18 months, with quote unquote the demand level that it's at, maybe we're just at equilibrium right here. And I'm still, I still have a question mark about that. So we're a trading range market. Where's the low end of the range? Is it higher than the Q4 low? And, is the high end of the range now, $600 on Western Spruce 2x4s delivered Chicago? Is that the new high? That's what I'm wrestling with.
So the question is, and I get your point. The question is, when you remove 30% of the production, and you guys know the Euro space a little better than I do, that's clearly not going up with tariffs and exchange rate, as Thomas said.
Yep.
How long does that take to filter through? I think it takes time to filter through until there is a demand change. And when you take 30% out, the demand change may not be a lot. It may not have to be a lot. We're talking a 50 billion foot market, right, in North America. And we are, in the space of 24 months, we're going to remove at least 3 billion. Is that's going to have an effect, probably not in January, February, but it might have an effect in March, April, May. And who is going to change their buying habits of the last 3 years, which have worked beautifully, right? Being sort of net, like tight or slightly short. Who's going to change it until they have to? Nobody.
No, that's a great point. And Kip, you actually mentioned something to me weeks ago, and I took it and made it my idea. Sorry about that.
Yeah. Okay.
Did you go like this, Ashley? That's why you made it your idea?
Well, and we've noticed it after you think, I think, let's say the major retailers, most of them, not all of them, but most of them, probably have the lowest inventory on the ground in their yards that they've had in a long time. Is that Charles, would you say it's like that on the Southern Pine too? And on everything, it feels like it. It feels like it. Not all of them. There's a couple but what if every one of those? Go ahead. Sorry, Charles. Go ahead.
I was going to say that's why I wanted to make sure. That's why I wanted to make sure I clarified, the inventory thing that we were talking about before, right? It's not necessarily wood on the ground, and it's not necessarily a need to stack wood at the retail level, but it's a need that's coming that at some point is going to rear its ugly head. That's all.
Exactly. And so what I'm seeing, sold a job to Tennessee. Greg and I was laughing about this. Sold a job to Tennessee for 316 shipment on trucks. And then the orders came over for 39 and 316. Then Friday night, I get an email and the guy's like, hey, can you ship some of those next week? I'm like, wait a second. It's like, and it was like at 5:45 at night, like I get this thing, can you get some next week? I'm like, hey, just like, I don't know what you committed to your person. I'm going to do the best I can to get them out 3.9 and 3.16 with the way trucking is. So my question is this, like Kip, Greg, Charles, if every one of these retailers, trust facilities, multifamily, all decided we need an extra 30 days of inventory, an extra 2 weeks of inventory based on what we currently have, what would that do to the market?
Go up $100 a thousand. $100 1,000, it would like move overnight.
Yeah.
Yes. Yeah.
But like my whole thing is, so what is that catalyst going to be? So, and I go back to, and I've quoted this like before on the show. So I feel that retailers aren't changed their buying strategy. We did see a big increase in multifamily job coverage late last year and in the early part of this year. Got a bunch of business got pulled forward, and that was part of the strength that we saw in the marketplace. My underlying sense is that there's a bullishness that sits underneath the market that, people have had it for the last year, all on this idea of we're going to curtail production, blah, blah, blah. So the market has the biggest move when reality is different than people's expectation of what reality was going to be, because everybody's planning on what their expectation of reality. And so in order for us to have that move, we need a catalyst. So we need either more substantial price production curtailment, which maybe the market's going to make that happen over the next 30 to 45 days, or we need a marginal increase in end-use consumption via better housing. And that's my real wild card. Is that in the cards or not? And if it's not, we're going to flatline bottom end of the trading range. Maybe it'll be higher than Q4. We bounce $30 to $40 a thousand, and that's all you got.
Greg just said everything I wanted to say, just in a better way.
Well, I mean,
don't say that, Charles. You know what? You are an eloquent orator.
I don't know. Every time I talk to Kip,
and you're
he
a
tries
very
to
good
talk
looking
me in
man,
circles,
too.
man.
Question here. So I'm seeing things that I don't normally see,
Charles.
right? I'm seeing multifamily guys calling me, looking to pick up units on trucks, less than truckloads, or shopping like grocery lists. These are guys that buy 10, 20 cars of this kind of stuff. What that tells me, when I say what does that tell me? It tells me that you're covering the least amount you can because you're offsides on the job. And so how does this catalyst work? One large company wakes up one day and says, we have stuff sold for the next 60, 90, 120 days at this. Why the hell don't we cover it? Because waiting for the price to get lower after I've heard Kip, Greg, Charles, and Ashley talk, the risk jumps every time that you wait longer. It's just my idea. I could be wrong on that. So somebody's going to step in and decide they want to put a whole bunch of inventory at the ground at some point, I'm guessing. And we've seen some of that on some of the ones that we consider smart in the last week or two.
Are you still relying on snail mail publications from the 70s to reach the forest products industry? It's time to upgrade. Advertise on the Lumber Word podcast and get in front of the lumber world every single week. Our episodes are tuned in by the largest segment of influencers inside and adjacent to the forest product sector. Decision makers who shape the industry. Ditch those tens of thousands spent on outdated print ads and project your product or service across the podcast universe instead. Ready to make the switch? Head to thelumberchannel.com, click on Connect, and drop us a line with your info. Let's amplify your message today.
And that happened in Pine about 2 weeks ago. There were some deals that were cut to clean up some messes that kind of allowed me to take discount back out of it, right? But once again, it goes back to order file, number one. And then number two, sorry, I'm reading this.
Yeah. So my only comment about that little thing from Matt is, it's a 50 billion foot market in the United States, right? The commodity that we trade. And like people can say, they're in California and, there's no wood in the Bay Area, and I'm in Baltimore and there's tons of wood on the dock, and I'm in Texas and the reloads are overflowing. Like everyone is talking regional, right? The only data that we have that we need to pay attention to is not what people are saying. It's what do we ship from Canada every month? And it comes out within 24 to 48 hours from the end of the month. And what comes in from overseas, right? Because we do not know Southern pine production within 24 hours at the end of the month. We do not. Do we know the Pacific Northwest within 24 hours from the end of the month? We do not. But those two numbers we do know. And so when someone says we have more inventory, my comment is from last January, we're down 30%. So is your demand, is your takeaway in whatever sector of the business you're in, is it down 30% from last January? If it isn't, then you probably don't have too much inventory in the field.
And Kip, I agree that over the last 24 months, the amount of inventory, pipeline inventory, has decreased because they've been able to do that. You know, every time, you know, you can take, you know, 5 days out of your inventory because you can get things quicker and you have less price volatility. You think about this. You think about the big guys. Perfect example. And then I'll do one other thing that'll flip into that. If the big guys, the big U.S. end use consumers decide to add 2 to 3 weeks worth of inventory, big pro yards, what happens to the price of lumber? They decide today they want to add 2 to 3 weeks worth of inventory. Probably goes up $25 or $30 over the next, you know, week as they do that. If they decide to drain a week's worth of inventory, the market falls $10, $15.
So when you say that the pipeline has emptied, the answer is yes. There's 30% less wood. So the answer is yes, right? And the other part is, and I mean, we all talk about it because it seems to be, you know, an interesting number, is what is the break-even price? Well, that's really seems to be important. It kind of isn't important, right? Because we've seen mills just toasted $1 billion relatively quickly in the fourth quarter. What they look at when they sit around the boardroom table and you talk about, you know, adding production, you know, putting another shift on at a yellow pine mill, they look at a return. And the return is like $625 is your cost on spruce mill. That's $735. Break even. We all look at that. They're looking at internal rate of return of 12, 15%. They look at $850 as a business model.
Then why aren't they making less?
Just to break even. So there's nothing coming anytime soon.
I mean, it's like, hey,
that's a great question, Greg. Why in the boardroom are they not making a decision to make?
Why are they not making less lumber then?
Well, I guess that's the difference between the cost of production and the shutdown cost. I mean,
which I had that conversation with several Eastern mills. They go, you know what? Our shutdown prices cost us so much money. We're better off losing money at this price than to shut down.
Well, and if I heard Kip right,
I guess maybe I answered my own question.
When we've looked at these write-downs, Kip, this is what you told me when I was walking through the grocery store a couple of weeks ago and we were having that conversation, was they're not taking these write-downs because they think business is going to improve in the next few years. Right? They're taking them because
the auditors are going, you know, you own 25 yellow pine mills, and in the last 15 quarters, you have shown 0.00 Blutarski's, you know, grade point average, 0.00. You need to write them down. That's for you Chicago guys get that.
Yeah. Yes. Yes.
We do.
Yes. Dean Wormer. Wait, Matt was asking why
Kip,
would
I
be,
can't let
why
this
would
time go by without, like just saying,
Hold on,
like,
Greg, hold on. Ash, go ahead.
why
I
would
think this is an
dealers
interesting question.
why would dealers be short at this point? It's a good question. Why would they be? You're going out of seasonal
Because
strength.
it's worked for
they can't buy it
36
at a
months.
profit. They're short under the current replacement cost. And I do believe that there's a lot of term business out there that is under today's price.
It would have to be term business, not that basic third quarter, the rolling average where there's no risk and they just look at print and hey, there's some cases if they're looking at print prices on it, they should be buying in because they're buying $50 underneath some what numbers are printing, right?
Hey, Charles, you know that thing that you sent us earlier today, right?
Yeah.
Though, no disrespect, but there are guys out in the field that in, December and early January, we're happy to sell, April, May, June, July, August, September starts at the then current cash price. And there was a lot of business taken at those numbers.
Yeah. Yeah. But Kip, we were talking about when you got on, there was something on LinkedIn where a sales guy in the field for a big retail yard basically said there's no value to transferring risk to a broker. Is that what it said? Is that what the thing was?
Oh.
You gotta be shitting me, guys.
What's that?
Oh boy.
You okay, Charles?
Yeah, I'm good. Controversy just follows me, I guess.
Yes, yeah. There's a lot of people are gonna be hating on you now, man.
I mean, I'm an easy target. Kip knows it.
Yeah.
Oh yeah. Yeah, I'm still trying to explain to Charles that the plural of foot is not foot, it's feet.
You know what? It's a different language where
It's a different dialect.
Different dialect.
I mean, Kip, if I had a comb over like you do, I'd be made fun of if I went to the gas station. Let's be realistic. I mean,
hey, but
grief.
Kip, I did just want to just say, I mean, it was an unbelievable game on Sunday, and I wish those two teams could play, a best of 7 series because it would go 7 games, 3-3, and they'd go to overtime. I mean, I could watch overtime play forever, right?
Yeah, no, it's like it's the best hockey game I've ever seen, and I've seen a lot.
Yeah,
it was brilliant, really, really good.
Why did you guys leave the guy in Chicago, Kip?
Oh, come on, you had to do that.
No,
I was trying to be really nice.
No, I'm more curious. I'm curious about it. I'm really curious about it. Was it like because he didn't go to the other?
No, I think like basically it came down to, they had one spot kind of for a younger guy, and they didn't take the guy for the Islanders, Schaefer, who is probably might have been just as good a pick on D, but they had to pick between, they had one spot, and it's, for a 19 or 20-year-old, it's Bedard or Celebrini, and Bedard was hurt before that, and Celebrini wasn't. So I think it's just that simple.
Okay. Fair enough. And then
they're equally deserving.
One more lumber question. So Friday we're sitting in here and Supreme Court says something on the tariff and the market moves up $15. And then all of a sudden over the weekend, we figure out, is lumber exempt from that? Or what's the situation with, where are we at on that right now?
Lumber's exempt. Anything part of USMCA is exempt.
Lumber. I mean, you're partly right, Greg. I mean, I've been saying that to you for 30 years, but I
appreciate that.
Whoa! So lumber is exempt, but lumber is not part of USMCA. The softwood lumber deal has never been part of the North American Trade Agreement, but any item that is got a Section 232 tariff against it is automatically exempt. Doesn't matter what it is. So steel, aluminum, kitchen cabinets, lumber, they're automatically exempt from any worldwide tariff, IEPA. None of that stuff applies to lumber, and none of it will.
Kip, I've made a living in this industry being partially right for all the wrong reasons. And the most money I ever lost was being wrong for the right reason. So
there we go.
Yep. That's it.
The skill's
That's
better
it.
than luck
Boom.
is what
Mike,
you're
let me
luck's
go.
better
Mic
than
drop.
skill.
Mic drop.
There it is.
Well, actually, knowing whether it's luck and skill is the most important part. Knowing if you made money for the wrong reasons or lost it is the best part, is what you want to know, right? So you don't do it again.
Sure.
Yeah, because if you don't recognize that, ego always gets in the way.
Yeah. Yeah. All right, guys. Well, Kip, man,
hey,
this was
Kip,
great having you
always-
on again.
Always great having you on, Kip.
And-
all the best.
Hey,
man.
Kip, the pleasure's
Awesome
all
to see you
mine.
guys.
All right, guys.
The pleasure's all mine. Y'all be good.
Cheers.
Thanks for listening to this week's episode of The Lumber Word. The Lumber Word podcast is dedicated to engaging conversations about the lumber industry, including trading ideas, market trends, and evaluations of overvalued and undervalued assets. We wish to emphasize that the discussions and opinions expressed in this podcast are purely for informational and entertainment purposes. They should not be considered as financial or investment advice. We encourage our listeners to make their own financial decisions, taking into account their unique circumstances and financial goals, and to seek professional financial advice if necessary.